The trend in crude oil has continued into June. Just in the last week or so, the market has moved out to a 2.5-year plus high. So is there more to come? Are we going to see perhaps $100 a barrel? Or surely has the run in crude gone far enough for now? Crude oil is always an interesting market to look at, of course, particularly given the volatility we've seen over the last year, with the cash market trading as low as about, well, briefly below $11 a barrel. The futures famously went negative in April of last year. But since then, we've seen this fantastic recovery. So given where we're trading now, we've got to go back to October 2018 to see crude last up at these levels. So what next? Can we trust this trend? Has the trend gone far enough? And now is the time to think about getting out and maybe even going short. As usual in this video, I'll talk about what's been driving it, what to look out for. Then we'll come back and look at things in a bit more detail. Hello, I'm David Jones from Capital.com. I thought we'd do an update on WTI crude, the US flavour of crude oil, because it's hit another 2.5-year plus high this month. So I thought we'd take a look at this trend in a bit more detail, talk about some of the recent news, some of the forecasts, and see if there's an opportunity at these levels. As usual, if you're watching this and you haven't subscribed, if you could click on subscribe, it does help support the channel. And of course, every Friday at 2:30 UK time, we run a live stream where we look at our usual mix of markets and a whole host of other ones as well. If you're subscribed to our channel with the alarm bell notification clicked, you get a message off YouTube just as we're about to go live. Right, let's get into it and take a look at crude oil in a bit more detail. So just to recap, it's been a great year so far for crude. You can see the trend on the chart here, but so far, year to date, at the time of recording, the price of crude is up by more than 45% in 2021. So we've seen so much strength that, as I said, during this month, we've hit its best levels in more than 2.5 years. So we've seen crude push above $70 a barrel, taking it back to where it was in October 2018. It's clearly a great performance considering where it was March, April of 2020. We saw further strength at the end of last week as apparently OPEC sources came out and said that even though US oil production was getting ramped up, it still felt that growth and output growth in the US would be limited. So again, perhaps trying to address any concerns about a supply-demand imbalance. This is despite the number of active rigs in the US being 200 more than at the same point last year. So OPEC allegedly don't think this is going to drastically affect US output of crude for this year at least. Of course, with the price rising, we've seen plenty of sort of bullish forecasts. Goldman Sachs said that it expects crude oil to trade up to $80 before the end of the year. And one of the drivers behind this is the global vaccination programs that we're seeing going on. I think that's going to help clearly economic recovery. And in addition to the $80 target, we are, I think, starting to hear some analysts calling for $100 a barrel for crude oil, which is great if you're in the trade. However, I think there is a note of caution here. Clearly market sentiment is at its most bullish at market tops, at its most bearish at market bottoms. And I just worry, is perhaps everybody getting a bit too bullish on the price of crude oil? Don't forget, we have come up 45% this year. But that trend is still up. The risk for crude, as ever, all the way through this, is that the market has overestimated the strength of the economic recovery. For now, I think that trend is still strong. Let's talk about the levels to watch, then we'll jump back onto the platform and see what the trade could be. So I think the immediate target is the high from less than a week ago. So coming in around $72.75. After that, just looking at some small psychological targets, $75 and then $80. On the way up, plenty of support left. And for me, the most immediate one, the lows for this month, around $68 a barrel. But as usual, let's put some color on these numbers. Let's take a look on the platform and take a look at crude oil in a bit more detail. I thought we'd start things off looking at a classic trend following indicator or system, whatever we call it, the 20-day moving average. So it's the green line here on the chart. And it's done a pretty good job all the way through this swing, really, off the November lows last year. Of course, traditionally, a move above the moving average is a buy signal, a move below it is a sell signal. And actually, for much of the last couple of months or so, it's almost provided a form of sort of sloping support for the price of oil. We did see it move back to it the middle of June. So far, that's held. We'll take a look at the price action and the trend in a bit more detail in a second. If we take a look at the RSI down here, it has gone overbought and given a sell signal. But that overbought situation started from really early in June when the price was about $68.50 a barrel. Of course, the price pushed up since then, trading up to 72.73. We've seen the price back off a bit, but not by much. It's the most overbought the RSI has been. We've got to go back to here to February of this year. And you can see straight away, I think, one of the issues with overbought, oversold in a really strong trending market. Back in Feb, the RSI was overbought, but the market carried on for another $12 from where it first went overbought. So it is suggesting it's a bit overheated here. Given the strength of the trend, I don't know how much weight we'd really put on that. But let's take a look at this trend now in a bit more detail. So if we go right back to the April lows, you can see this trend line has done a pretty good job. We had the sell-off in November. The market recovered. We've seen a few moves close to this trend line. At the moment, that trend line's coming in around $62 a barrel. And for me, I think that's quite an interesting area. I think if we did start to lose perhaps these lows from the third week of April, around $60.50, and this 21st of May low around $61.50, I think that's pretty good support for the price of oil. So I think only if it starts pushing below here do we have to worry about a reversal. That trend is still strong. And of course, the classic way of trading a trend is to be a buyer in dips. But again, just a note of caution. Let's just take this chart out. So we're still on a daily chart here, but we've got it going all the way back to 2014. But what I want to focus on, these highs from back in October 2018 came in around $77 a barrel. So I think whilst there is still some upside left, I think we do need to keep an eye on this zone from the second half of 2018, because up there from 74 to about 78, we did see sentiment change in oil. So for me, I'd just be keeping a wary eye on that. But for now, I'd still be quite happy to buy dips. Let's have a quick look at the shorter term. So here's the market over the last month. We're now looking at an hourly chart of crude oil. Lots of different pockets of support, pretty good support, pretty much all the way through most of June, ahead of $68 a barrel. So again, perhaps one strategy, if we were looking to buy a dip, would be looking to have stop losses the other side of 68. So I think the trade I'm going to set up here, I'm going to leave an order. We can see clearly some volatility, as we've seen in all sorts of markets over the last few weeks. I'll leave an order to buy at $70.50. So that's basically just pushing back to where it was during last week's trading session on Friday. So I'll put an order in at $70.50 and I'll put a stop loss in. As I say, 68 had been pretty good support. Let's say I go 67. So I'm going to go $70.50 for an entry point, 67 for a stop. Let's set that up. So the market's currently 71.25. I want to buy 115 barrels if it drops to $70.50. So about 70 cents lower than where we are now, 75 cents. If the order gets filled, put a stop loss about $3 away, down at 67.50. Let's place that limit order and leave it sitting there in the market. But again, going back to the daily chart, the bigger picture view, you can see it was just about a month ago the market was down around $61.50. And I think it's only if $60 breaks do we then have to worry about perhaps finally this trend is running out of steam. So even if we got a deeper sell-off from here down to the low 60s, it still looks like a buying opportunity. I'm a bit wary of 77 to 80 on the upside. But for now, at the time we're recording, the trend in crude oil clearly still up. That's it for the update. We'll see if this trend can continue. We'll come back to it in a couple of weeks' time, see how things are faring. But for now, from me, David Jones and Capital.com, we'll leave things there. Good luck with your trading. For more trading videos just like this, please subscribe to our channel.